That'll be a good start for the recording. Got some people coming in. What's up, chat? How am I doing? Is my microphone working? No, I should be on YouTube too. Can you not see it? Is it not up on? It should be up on YouTube. Yeah, it looks like it's on YouTube. Can I do? I'll post the link in the chat. There we go. There we go. There's chat. There we go. In case you need it, there's a YouTube link. What's up, Tom? Good to see you. I'm on tube. All right. That's what you guys do in Britain. Oh boy. Check, check. Check, check. Oh, very nice, sir. Cover calls in the morning. Yeah, they were up. Look, this is what's wild, right? Seriously, like I think I specifically called out the 25s today. And so at open, they were 70 cents off the day's high. We closed within 20 cents of the day's high, and they are down like 40%. I think they closed at like 47 cents. Is that like 40%? I think so. Close, 35-ish. That's a lot. And it's just absolute value to have that on a contract in the week where we have a call wall for next week. Makes me have some decent confidence in that trade. So cheers. Nice. Yeah, anymore I just like don't even do risky stuff. I'm just like, whatever, call wall. I'm talking about this for a while. Call wall, cover call trade. It works too much. It works too much. I think I was a while ago, I was like messaging Richard or something about this. It's like, I think I even talked about this in the video. It's like the long call stuff, like around earnings, like even when it looks like it should work, even when the price goes up, it's a bullish earnings, IV crush, calls go down. It's like you can be on the other side of that. And win all the time, which is great. Let's see. Brian's got a question. What's up, Brian? Why do you think the red swap will be on Wednesday with the FOMC instead of September 22 when Richard thought? Oh, not. So I'm not exactly sure when this would be in. So I know Richard's method was to go swap bottom to swap bottom, right? Like to go from like local bottom to local bottom going back. I guess the thing about that was like, I think, who is it? It was either Metro Ballin or like maybe did Metro, I forgot who Metro Ballin got his data from. Maybe he did it on his own. So last time we had to deal with red star swap, 6 months ago, back in March, it did line up with swaps of GME, like a lot of notional value that we could see in the data that Metro Ballin had cleaned up. And so part of the thought back there was like, okay, is this going to get rolled? Is this going to get closed? Was the convertible bond offering specifically done to accommodate the closing of a swap, something like that? Wasn't sure. Now, I looped those in together, but there is another phenomenon which is going on, and I'm not sure if Red Star Swap, whatever that local bottom actually has to do with. I'm not sure if that's connected to some actual interest rate swaps. So it seems to be that GameStop is swapped against interest rates. Ultimator has written a considerable amount about this and has been doing quite a lot of research on trying to look at correlations between, say, GameStop and other things that are potentially swapped with interest rates, like gold and silver, for example. I do not know if those two concepts are related. I do not know if the Red Star swap, for example, is related to like a 6-month interest rate swap, and if that swap is uses GameStop as a hedge. Of course, I hypothesize that the interest rate cuts meant that a lot of GameStop last year needed to be bought, and within 2 days of each of our cuts last fall, GameStop price moved up a lot whenever it happened. A lot of volume, and they moved up. So I'm not necessarily saying anything that contradicts Richard's theory about the swaps, right? Again, he measured those from bottom to bottom, going back however many years. So, right, I'm not saying that there isn't anything that's going to happen on the 22nd. I'm just curious as to what the relationship will be between that and the interest rate decision. Whether they go ahead and maybe, if those are two different things versus the same thing, do they go ahead and try to move that early? Do they try to close that maybe or roll that inside of September 19th? Inside of OPEX, because they'll have some additional pressure in trying to keep the price down for September OPEX. I see, right, as we're closing now, right, I mean, this was a higher close than I would have anticipated for today, which is cool to see. But at the same time, still looking at a $25 call wall for next week. It is an OPEX. I would not be surprised if the dealer takes some action to try to keep that suppressed, or if just the way that dealer hedging ends up working is to keep it pinned and bracketed right, at or below $25. If that's the case, if that sort of pressure is on, then I wouldn't be surprised if we saw the price get moved down to accommodate some sort of swap roll, since that kind of factor would already be in place. But not contradicting what Richard says, or thinking that there's something else, or that getting a different date for his projected Red Star swap. Not doing that. But good question. Yeah, sure. Nice, dude. Nice, dude. Oh, nice. Oh, nice. You did them for today. And close for a penny. I think if you close for under 5 cents, well, Schwab does this. If you close a contract for under 5 cents, there's no closing fee. So in addition to trying that back and forth exploit on options contracts with single contracts, you can also close options for free if they're under 5 cents. Johnny, yeah, man, right? Like, as soon as you point it out, it's like that is, I don't know. It's not fancy. It seems it seems dumb. It seems like it shouldn't work. It seems like it's low hanging fruit. It's obvious, but it's low hanging fruit that's like it just keeps working. It just keeps working. So again, this is not trade advice, but this is I keep making that trade. That trade keeps working. Um, especially when we get close to one of those. That's the other thing too. Another one, and you could say like you could call this like the corollary to the call wall cover call trade. Is you wait till it gets close or slightly above the call wall, like we just saw today, and then look at the gamma exposure for that particular week and the following week. And if the call wall is in the same place, good chance you get pulled down, right? You get pulled down just below that. I mean, how many times over the past, basically for all of August with 23s, just what would pop up? Oh man, is this it? Are we going to 25 now? Where's the call wall? It's still at 23. Where do we go? Dip right under. Dip right under. So yeah, I mean, I don't know. I guess that's the 21st century Renaissance trade. I mean, I guarantee there's other people who must use that out there. I just, I get, haven't seen it put quite that way, but it works. Cheers, Guido. Ride or die, dude. I feel like that should be a line from like Wolf of Wall Street or something. Yeah, we got that double live stream, dog. Well, it's Friday. I couldn't break with tradition. Got to get in here. Yeah, did it really dip that low? Was our volume really that low today? Pop over to the daily here. We can check out. Oh, so sleepy. Excuse me. I might yawn a bit. Just finally moved into new apartment here after weeks of avoiding potential property tax fraud. So, but it all cleared up. Let's see. What does it say? I'm getting 9.2 mil for vol today. And then obviously earnings day, I got the 46 here on Trading View. But maybe a lot of it is a dark pool. Let's see. Make this a little bigger. Oh, this is max pain. Hold on. Okay. Yeah. So I guess if you take out the off exchange volume, we had like 4 mil today. That's wild. Over 2/3 of our volume was off exchange. That's a dip. That's a dip. Yeah, I think he did. I think he did. I think he did. Good for him. He's molding back into real life. I think about that, right? I think about that. I was thinking about that, today, a couple days ago. I was thinking about that actually after I had this episode with this kind of, uh exploit with the money stuff, and I was like, how long could this go? Like, could it do it? What do I just do this infinitely and get millions? Like, what happens? And I was just like, man, this is like a lot of hours to be doing this. Here, kind of doing this, cover calls, doing the little write-ups, like that's not that much. I don't feel like this necessarily like rules my life in the same way, but it can get easy to get sucked in, right? It can be easy to like the game of this. Like, it's a fun, once you start to win a lot, right? It's a fun game. When you approach it from the perspective of a game that is fun to play because you are confident in your ability to win, and that the determining factor is your skill, and that's the fun part, right? Maybe if you guys like played video games as a kid, like you probably remember this time when you were young or something like that, when you were playing Mario or Super Star Wars or something like that, where you're just like bad at it, like you're very bad at it. You like couldn't, it was difficult for you to progress in levels or like figure out what you were supposed to do, that type of thing. And you're just bad at video games. And so like you were still fun because you'd like, maybe, I don't know about you guys, but I would like make up like a fake game, or like I would just like do my own thing in my head, or role play, just like kind of in the first level, like I'd spend like 20 hours in like the like the home village, just like role playing as myself, or role playing as the character. I don't know, not playing the game when I was like 6 or 7. I don't know, right? And so you don't like really progress in the game. Like, it's fun, but you kind of do other things. Like, you're kind of like LARPing as a video game player when you're like 6 or 7, because you can't like, if it's too difficult, you're not going to go anywhere in Devil May Cry. But then at some point, right, you get good at the game, and what determines your level of fun is like how you'll perform. Like, I imagine like Call of Duty was like that. Once like I remember playing like Call of Duty, not Warzone. What was the Black Ops? I remember in college like playing Call of Duty Black Ops and stuff. And like once it was like, oh, like once you got really good at it, you're like, all right, I'm on a roll. We're zipping today, right? Like getting tons of marks, like whatever, capturing the flag. I'm doing so well, and so like your skill becomes like this kind of thing where it's like, okay, as long as I'm going, like I can just put in more attention, more time, more skill, more playing, whatever, and I'll have more and more fun, and I'll keep getting better. And so like this can get like that, but it's it's easy to forget that this game, I mean, it's sort of dumb, right? Like, it's dumb that we play this game. But the whole point of it is to be able to, at least for me, right? At least for me, like the whole idea was something's not right here. Something's not right with what's been done to our financial infrastructure. This was a problem that kind of, nipped me in the bud, or something like that, bit me in the ass, if you'd rather say it. And back in like COVID times, 2022, trying to get on the job market, like watching stuff just like skyrocket in price, and then just have like the media be like, what are you talking about? Inflation is 3%, that kind of nonsense, year after year. And be like, wow, I don't understand this. I don't understand what's happening. I need to understand what's happening. So, but then once you kind of develop the skills and you develop the ability to do this, it's like, at what point do you walk away? At what point do you go back to life? At what point do you say like, yeah, this amount of money that I made is fine, or the ability to generate this kind of money every month is fine. Like I can kind of check out. I can kind of go, and live life, right? Because like trading isn't life. Financial analytics isn't life, right? Yeah, but I think about that a lot, and I think that's probably something that is motivating Richard, especially right now. Just one second. There we go. What's up, Shinsasu? Yeah, I'm trying to picture how I think the warrants will go. Yeah, I mean, like if they're going to close it, then they're going to try and bring the price. They're still going to bring the price down as much as they can to close it, if it hasn't already been closed or partially closed. Is my guess, right? Because it still matters. The price that it is when they go and close it will still matter. We are starting to see the signals, right, of a bullish turn. The media is starting to get behind GameStop in a way that they haven't. But the question is, are they doing that? Is that still going to be premature? And then in like 2 weeks, it'll go up, it'll go down. And then in 2 weeks, it'll start to go up again. And they'll be like, oh, see, we told you, it's hard to cut through the noise a bit. With the warrants, like I think I pointed this out back in maybe back when we were doing the earnings live stream. But if we take a look at not to compare the fundamentals of this company at all because they're very different. There we go. But I remember trading this. This is actually where I figured out like I first started like building positions and doing like covered call trades and like trying to experiment with kind of alternative options. This was like the summer of my my first comeback, right? Because I blew up my account in 2021, and then I had to like make money to make a comeback, and then I did, and made a comeback, and then I had some success with the summer, but also tried to over scalp and didn't quite get that right. This was the midst of the winter of my discontent in this regard, but yeah, this was the ape dividend. So it was like leading into earnings here. I think this was the ex dividend date. I think was the 12th. And then Wednesday, I think, was the date that Wednesday was the date that the ape dividend got issued, and then it just plummeted, right? So it went from it's been split so many times. So nuts. Let me make this bigger. It's been split so many times. I remember it being like a couple bucks, but it's like 100 something now. The historic price on here. Yeah, do we still have, is ape a symbol? Can we see that historically? The ape, APE. I mean, it's not trading anymore because they all got subsumed. Like soaked up ape USD. Oh, there's a coin called ape now. I wish I had those charts. But anyway, right, that's what happened. Like it was a big, like earnings was, big, and then they announced the ape dividend, and then following that, it shot up. Actually, it shot up, yeah. And then it dumped, and it dumped all the way back to the pre-earnings level. And then following a little run up in early September, it just, continued to do the AMC bleed into oblivion thing. Pretty sure, what's this? This isn't the ape dividend, right? No, that was the 1-to-2 split. Oh, this is when they took up the ape dividend. That's right. Something like that. Right? Yeah, not 23. It was 22. Summer 22. So I think with the warrants, I think we might get some kind of lead up like that, though. I mean, maybe not quite as much. It doubled. I don't know if we'll necessarily double, but there'll be a period of time. I think I could see us kind of running up to 29 or 30 by the ex dividend date. I could see that. I'm not saying that will happen. I could see that happen. But I kind of hesitate to think that would just that'd be a straight shot because of FOMC, because of, Richard's theories about swap stuff. We did end up seeing 23.71. I kind of saw that. I was like waiting to pull the trigger, on a re-entry there on some cash, but did not. Waiting for us to kind of go back and test a lower level here. What we did do today, what we did deflect off of, I will point out, we did deflect off of that 100-day moving average. Right? So, I mean, actually what I did, right? We shot up through here. Pre-market, I saw we went to 26.69. So I sold a considerable portion of my position and then bought back in like during the day with another position. I still have a bunch of cash on the side, but just like swung trade a very large portion of my position between the 26.69 because I saw we were over the 200, right? Video that I did before earnings. That's what I said. I was like, they're gonna slot us right into here, right? I had that chart. They're gonna slot us right into here, that's gonna be our pocket there, I guess. When I saw that we went above that after hours, I was like, oh, that's okay. If we went above this, then that's an oversold. Like that's an oversold signal or overbought signal. That's a big overbought signal. And sure enough, right? So exited up there at, I don't think I got the exact top. I think I was able to exit at like 26.30 or something. And then sure enough, we came back down pretty hard. But what I just saw us do today, right, was go ahead and knock on the door there, our high of the day, tap it on the 100-day moving average. So we opened slightly above. Did we open slightly above? No, we opened down here. High of the day was slightly above the 100-day. But I think we could see something of a move back down prior to OPEX, where we come down and maybe touch the 20-day here, somewhere in the 23s again. I could see that. Doesn't mean it has to happen. Maybe we just mow ass right now. But I think we could still see that, and then maybe we charge up a little bit into this area before the dividend, and then our ex-dividend date's going to be here. So maybe like this area, maybe 27, maybe 28, something like that in here. And then we go down. Or maybe we just, go straight up. I don't know. And then Michael misses mow ass. But, am I following anyone for swap-related info? There are some people that I ask questions of swaps for. Sometimes Ultimator writes about swaps. Always Sad but Truthful, obviously, is always talking about derivatives, but he's talking about something much deeper, and I don't think very much really at all concerns himself with price action. Swaps are, I think, a lot harder than you might think. So I just kind of keep the conversation open with a number of different people and kind of ask like, hey, what do you see? What are you seeing? What do you think here? It's important to keep in mind that right, Richard's theory is that it's a theory. It's a very good working. It's a very practical, like a practicable or a pragmatic theory for approaching the stock, because it allowed Richard to be able to do a really good job at timing bottoms and expecting when they would happen. It is also reasonable to assume that the only type of instrument that would result in the type of price action that would lead to those lows would be swaps. However, it's important to note, right, that of course the smoking gun is to see the swap data itself. And that, of course, is very difficult to wade through, to go see the swaps. Back in March, we did have swap data that lined up with the stars that Richard was pointing to. So that was very interesting back in March, because that was like, oh, there are pretty big GameStop swaps that show up pretty close to what Richard is talking about here. Maybe these do have to do with swaps, and we did get lows around those dates. So I think, yeah, we talked about these here on the, we talked about them here on the channel. That's here. So that would have been here. 13th, was it? Yeah, that was over a weekend. Yeah, 13th. So there was swap data right around here. And Altimeter also released his indicators. It did not pick up swap stuff, but Bottom Finder did, which Altimeter also thinks has to do with swap related stuff. So right around here. So it definitely picked that up. And then, so I think this was like Pink Star or Yellow Star. And then Red Star was definitely the 31st, I think, or the 28th. 28th, and then there was something about the 31st, I forget. But there was something in here. Bottom Finder didn't pick that up though. Red Star was here. And what we thought, right, what we hypothesized is maybe they actually just get rid of the swap. Maybe they go ahead and close it out, okay? But don't know for certain. Good question. Do we think RK had his 9 million shares out on for loan, or was he potentially selling calls on them? You don't get that good of a return, I think, if you put them out for a loan. So I wouldn't imagine he would do that. The rebate is bad. It's essentially like getting interest rate or something. So calls are way better. I would not put it past. I don't know if he does that. I don't know if he does short options, but I mean, if I were him, I would do that. I wouldn't even waste my time with loaning my shares. Oh, very cool. Free closing under 50 cents, meaning like the price of the contract. That's very cool. Hey, Chart Chief, what's up? Happy Friday, sir. Yeah, that was fun. That was very cool. Yeah, I wouldn't be surprised. I would think so. This was what was interesting, right? Last year, the first cut was probably, a 25-point run was cut. Rate cut was front run, but then the 50-point cut came as a surprise. If we get a 50-point cut surprise, we might see some cool stuff as they try to figure out how to hedge that. But they may have. I think you might be right on that. I think you might be right on that. Nice, man. Very good trades. Let's take a look at the lending pool. It's under shorts, I think. Borrow fee. Oh, it did actually by a lot. By a lot. That's relatively pretty low for what we've seen recently. Good to call that out. Do we have any new FTDs? Not yet, right? No. XRT is looking okay. Quite a bit of liquidity. What about? Oh yeah. Also, there's this weird thing that's gonna. Oh wow. There's no GMEU to borrow. That's very interesting. That's very interesting. B is up again too. And they just announced that exposure to GME derivatives is now optional. They changed the language in the fund. Reese Politics pointed this out today. They changed the language in their prospectus so that, right, it originally said something like 80% of the fund's value was going to come from exposure to GME derivatives, specifically swaps. And they changed that from GME GME swaps to various financial instruments. So something is going on with GMEU here. Let's see, what are shares outstanding like? No, not GME, GMEU. $2 million, huh? What was it? Did it get? I feel like it was a little higher back in the day. No, it's right around. Yeah, it's right around what it has been. Yeah, the highest was back in like June. It was like 2.7 million. Yeah. Hey, fits and starts. Yeah. It's basically like a very high probability trade, right? So this is based on the fundamental assumption that the options market maker will take interventive action to prevent the price on any given week from going above that particular week's largest accumulation of net call gamma exposure. I'm not sure how well this always works. I don't know how well this works on other stocks. I do know from spot gamma that it's like close to 90% of the time. I think it's 87% of the time on SPY. The price will close below the call wall. So wherever you see the largest position of net call gamma exposure, 87% of the time SPY will close below that mark. I have reason to believe it's actually higher than that for GME. The difference is, SPY options, short, daily SPY, like call wall targeted stuff, will not give you returns that are that great. But because of the historical volatility skew on GME, you get some very, very good returns on really outsized returns on certain contracts when you go short. So number one, you're already probabilistically advantaged by selling a short call, a hedge short call, right? A cover call. That's number one. Number two, the theoretical probabilities that are offered by the Black-Scholes-Merton model do not take into account any of the dimensions of market making. I think really what sort of changed me from an unsuccessful trader into a successful trader was changing, essentially going, okay, accepting that this entire system is run by market makers for the interests of market makers. These are the primary profiting arms for things like GameStop. Market making. Market making is the best game in the business. It has risks, but it's the best game in the business. And we know it's the best game in the business because if you try to do it, you will get banned, right? They will shut you down if you try to market make as an individual. Now, this is very strange. Where else does, like, okay, there's market making, but that's just providing a service. The thing about market making, right, is a lot of things get offered that don't necessarily need to get offered, but they're bought because they are offered, right? And market making itself takes advantage of the fact that people do not, ordinary, retail traders do not know how to gauge probability very well. And so they know that they will come in, just like casinos know. They know that they will come in and make bad trades. And that all they need to do is just make sure that they're hedged against outsized risk. And as long as they are, then all they have to do is let volume funnel through their system, and they will make insane profits. All they have to do is scale. So what turned me from an unprofitable into a profitable trader is I started doing things that are based on trying to anticipate what the market maker's incentive would be. And the basic incentive for GameStop was to understand that, take as a given, right? And it's not proven, it's axiomatic, but that the majority of options activity on GameStop, I don't know if that's still the case, but the majority of options activity on GameStop on the part of retail is to the long side and to the call side. So you have a massive call skew, which is correct, and you have a big ask skew. So at any point in time, the maximum points of profitability for the options market maker are going to be where they can get flow, let's say, through a contract or through multiple contracts throughout the day. They can get people trading these in large volume. So and small movements in the price around certain strikes are going to cause the most profound change. Will cause profound changes in the pricings of the options contract. So that's going to be around key concentrations of call gamma. So there's an incentive to have the price basically converge at the money close to large gamma strikes, but to have the price ultimately close to the downside of those strikes so that everything ends up out of the money, so that the whole position just gets wiped at the end of every week. So it doesn't matter, right? So it doesn't matter. So ultimately, everything goes to zero and just the board gets cleared. And so what you see with GameStop is what's very typical is around 90% of all extant, especially calls. That's very typical. 90 to 92% will expire out of the money. So when I started thinking about trading in terms of the incentives of the market maker, I started making a lot better trades, because I started saying, okay, well, they have to fill my trades, right? This is their job. They have to do this. This is the agreement. They got to take my trades. Obviously, with my high frequency, round tripping stuff for a very limited time, that's that same concept until I got roll 390'd, and I got marked as likely marked with a secret professional trader tag so that my order flow is deprioritized. But cover calls, right? You can still do that trade. And you are essentially giving the trade to the market. The market maker will be fine. They will, they'll figure out a way to hedge that and make that not really matter. But for you, right, then you just you get to take advantage of essentially, taking a trade that reflects what you expect them to do with price action, such that it would maximally affect their interest. It would maximally benefit their interest. And so the largest position of net call gamma exposure, right? So I post about this, in my posts all the time. This is what I end up talking about. So on any given week, right, my price forecasting, it's not very complicated, right? On a weekly basis, I look and see where our levels of gamma exposure are, of large levels of net call gamma exposure are in particular. And it's a pretty good bet that on any given week, the price is going to end below that, 9 out of 10 times. So, and it's generally not going to end up very far from this. So one thing that you can do is when you're making a call trade, especially if you see this call wall tested, as long as we're not in some crazy season of the pump, then, this trade, essentially selling covered calls targeting the call wall, are going to work out in your favor. Well, they're going to, at a higher probability than you would think. Obviously, the trade itself is structured such that you are, you're not taking a loss anyway. You're either parting with your shares for profit, or you're pocketing premium on a regular basis and holding onto your shares. But very highly repeatable. I haven't been assigned once. I've been doing this weekly, monthly, different time intervals, depending on the nature of our implied volatility in a given GameStop cycle. And going back to May, and last May 2024, I haven't been assigned once. Right. Some of that involves anticipating when the call wall will migrate. But because that has happened, right? Being like, I think call wall is going to migrate, so going to close these. Day happens, big bullish day, open it up. Oh, it went from 25 up to 30. Now we sell 30s, 30, 30, 30, 30, 30, 30, and now we're down again. Oh, call wall moved down. Okay, now we can move down. 25, 25, 25, 25, 25. That's how that goes. Right. So anyway, that is the call wall cover call trade. We can come back to that, of course. This is regarding the question about, right, Patrick, I asked you a question about oh yeah 50 cents per share. Yeah I got you. I know, dude. I know. I know. I began this by being like, when I was talking about Richard too, it's like, it's nice, it's cool, right? If I did that, it might make more money, right? I might be able to forecast that dynamic price action maybe better, and then I can make some better trades, and then I can make more money. But I'm very happy with the amount of money that I make per week. I'm very happy with my approach and the amount that I can put into this and the results that I get out of it. There's something to be said about making too much money too fast and for the wrong reason. I was thinking about this, past couple weeks, and I was thinking about, like, I think I mentioned this, right, briefly early in the stream. But, like, what happens if somebody were to hand me $10 million right now? Like, what happens? What will happen? Would I become a better person? What would I do with that? I mean, I guess I'd find something, right, if that happened, but, you know, do I have a sufficient, let's say, creative vision built out to properly dispose of those resources in a way that I know would be good for humanity and the world? And I have some vague idea that it would involve getting a house or something like that, or, mostly just being like, well, this would prevent this or that from happening, medical bills down the road, saving for kids' expenses or something. But like, you know, that's not altogether too different than, I guess, the sums of money that I'm working with now. I mean, $10 million is a lot of money. That I'm not saying I have $10 million. I do not. but um, there's something to be said for making too much money too fast. Um, right. I think for myself, there is a just amount of money that scales with how much virtue and character development I can go through. Um, and I'm not sure, like, I'd have to cultivate some real virtue, I think, to be able to handle and dispose properly of that sum of money. Um, and if it were to, I guess my conclusion would be, if that were to happen right now, you know, I'm not sure I would have the discipline and vision to know how to dispose of that correctly. So, everything in its season, everything in its time. Um, I don't see a reason why I need to push the envelope at this point. I don't see right now why that's the case. But maybe with some development of vision, and the establishment of some goals, maybe that require a more dramatic increase in personal finances. That maybe that's something I'll do. But for now. I'm sure there are people who are already doing this too. Yeah, Shinsasu, have a copy of the Richard Newton sheet for myself. Somebody made a copy plus script that auto updates data. Nice. Ballers has his own copy. How does one find the call wall? So it's very simple. If you go on Unusual Whales, it's that big old bar that's just sticking out there to the right. On any given week, so you scroll down to the gamma by week, by expiry, and it'll show you it's going to be the largest net red bar sticking out to the right there. But what you would have to do if you wanted to try to do it manually, it's a good bet. You don't have to do it, exhaustively across every strike. You can go and look at the OI, and you can look and see at, which charts, which positions have the highest concentration of OI, and then you add up the gamma values per contract. So you look at the gamma value and you multiply that by how many contracts are at that position, and then you subtract the amount of contracts times the amount of GEX on the put side, and that's going to give you your net call GEX. The highest position, the highest value you get for net call GEX, that is your call wall. That is your call wall. It's not always the position with the highest amount of OI. It's not always the case. And in my experience, the call wall is a more reliable estimator of a limit or a target under which the price will close on a given week, more so than max pain. Usually they're close, but sometimes they're not. A lot of people are very excited. I've seen some of this. I think Hanakamatsu posted about this, like, oh, we're going to close, $2 above max pain. It's like, okay, sure, but we're still going below the call wall. So max pain in this case was less meaningful. Max pain in this case was not really an indication that the market makers lost control of the stock. Like people sometimes on Supersonic or something would say that we closed above max pain, they lost control of the stock under the call wall. No, they didn't. No, they didn't. The call wall migrated, and so this could happen. This, and I talked about this for weeks. When the call wall migrates, like this is to anticipate, okay, we're going to get a price up. This will permit the framing and control of that price up. And the right, I think call gamma, the call wall is a much better way to estimate, to forecast price action than max pain. Max pain is good if you don't have access to gamma, but I think gamma is even better as a forecasting tool. Yep, Reflex saying it right here. Casino always wins. House always wins, man. And then when they don't, they will ban you. They will ban you. Yeah, not banned yet. They might. If they do, you will hear about it. They do, you'll hear about it. Legends of Dragoon. I remember that game. Was there time travel in Legends of Dragoon? I'm trying to remember. I used to play this with my brother when I was a kid. I think so. Looks very similar. Looks very familiar to me. Legends of Dragoon. Those 4-disc games, man. Chunky. Yeah, right. This is There's a tool. Means to an end. I don't think it can be ignored, right? You have to kind of keep your eye on it. Be vigilant, understand what's going on. But yeah. I've been doing this, I guess, the way I've been doing it for a little over year and 4 months now. So 16 months. At some point I'll just transition to just doing the Bible. Maybe that's coming soon. Who knows? That's a good way to express that, Hoogs. The second you feel the game defines you is when you should look at the perspective of it all. Yeah. Yeah, that's right. Right. Basically, my conclusion, right? This is something we can talk about, I guess, with the readings and stuff that I do from the Bible too. Games in and of themselves are ways that we view the world, right? They're ways that we can map value onto the world and then use it as a guide for our action. This is basically like the entire teaching portfolio of Jordan Peterson, right? It's like his stuff, right? This particular game aspect he takes from the research of Jean Piaget and the development of children and the importance of play and what play is like. And, play is important as essentially the way that a child, and that actually human beings, right? This is how human beings develop. Like, this is how we build out new behavioral schema, right? This is how we extend our nervous system into the world, right? We put more of ourselves into the world and we put more of the world into us, something like that. And what I gather, right? What I gather, one of the messages, especially the message of the New Testament, but of the biblical canon as a whole, is that the real game, like the game of games, right? Because we don't just play games, we play games nested within games, like the Russian nesting dolls, right? We play a series of nested, iterated, and hierarchical games. That's something I think Jordan Peterson in particular says. That's the way he likes to put it. And it is important, and to follow up on what Hugi is saying here, it is important to remember what game goes where within that order, within the natural orders, within your own orders of value. And one of the claims of the Bible, the biblical stories, the biblical corpus, the biblical tradition, is that the game of life is the game of life, which is the furthering of its creation and becoming in space and time, is the game. That's the biggest game. That's the game to which all the other games serve. And if you want to figure out how to play all of the other games that you have to play in life, you have to remember and ask the question, how does this game serve that game? How does making money serve my personal creative end, my granted creative end and purpose, my creative purpose for the furthering of life itself, of eternal. Ooh, just hit my table. Does this act, does this game, does the way that I'm playing this, does this end? Do I think that this is necessary for me to achieve my personal creative purpose for the furthering of human life, of the eternal life and survival of life itself, including the human species, which is a natural part of that, which is an important part of that, which is a divinely appointed part of that, is one of the claims of the biblical corpus. So yeah, I think that's a good way. I think that's a good way to put that. Like, if you get to the point where you think the money-making game defines who you are more than that, more than someone who is striving for the furtherance of life, of human life, of eternal life for all living things, something like that, right? If you identify more with the money-making game versus that, then it might be time to take a step back. And I think, right, part of the reason that so many folks have animosity against, let's say, Wall Street or corruption in politics that has to do with being in Wall Street's back pocket or something like that, or this type of corruption, is the idea is that there's been a manipulation of the way that the money game is played, such that it eschews that game of eternal life, that game of living unto and for eternal life, something like that, and for life itself. And so when the money game is played for itself, yeah, it parasitizes the other. unto death, right? And that's in the New Testament, that's Christ's point, where he flips over, right? So essentially, right, in the New Testament, um, Christ is a Jew, and the Jewish people of his day, right, are very excellent financiers, merchants. They're very widely traveled, and so when they come back to Jerusalem to do, to celebrate the holy days, celebrate the Passover, the temple, the second temple, has been converted into a foreign currency exchange, right? The tables of the money changers. This is a foreign currency exchange. This is forex, right? And right, how does forex make money? It makes money off the spread. Market making. Literally, Jesus Christ comes back and he comes to the table. He comes to the temple, and it has been converted into a market maker. Market makers have converted the purpose of the temple into, rather than the worship of God, of the worship of being itself, of creative divine purpose, of life and becoming and all that is good. Instead of that, it's been converted just into market making. And so Christ's big point in this is, you defile my Father's house. Flips over the tables. Doesn't hurt anyone, but makes a scene. Flips over the tables. Does an outrage, sacrilege, right? So that problem, right, is the problem that a lot of people are feeling today. That's Occupy Wall Street. That's what's going on, right? GameStop is a continuation of that, right? As why people are so motivated by GameStop, why people are motivated by the Moaz stream. Not only, some people are motivated because they want to be rich, but some people see it as flipping over the tables on the Temple Mount. So very interesting. Very cool thought, Chris. Very cool thought. Yeah, that's right. Katie's public charts are very good. RKPMO is looking very good. Yeah, not quite at the zero line there, but we're getting there. We're getting there. Blue line's starting to curl up. All three of these guys will be charging home pretty soon. Hey, May, what's up? Yep. Yep, it worked out. You son of a bitch. I'm in. Looks like you're in need of a job. I love that episode of Rick and Morty. Where's Simple Rick? Must heist. I think we might end up muffled. I think we might not go all the way to 31. We actually went to 37. We ended after hours. We went 37 something. But we can get up there into the 30s. It might depend on rate cut stuff at the end of the month, but we can get up into the 30s. I think so. That's funny. I do not know what's up with Lulu. They're doing something weird. Is this Lululemon? I don't know. Did they have bad earnings? No. What? Man, I don't know. Is it just being shorted? Did they mess up their branding or something? Why is it dumping? This is ridiculous. I don't know. I don't know enough about the company, but very funny. I mean, you know, we have priced up, but you know, it's important to remember the thing that prices up the stock is the laws of supply and demand do not apply in the way that we would anticipate them to apply because of delayed settlement. Sorry, my brain shut down for a second there. I'm very tired. The laws of supply and demand do not apply in the way that we would anticipate them to because of delayed settlement. So delayed settlement allows demand and supply to be internalized so that when, let's say, you have a price up, you have a price up, right? Price is up, everybody, you'd say, oh, the price is up, people are going to pile in and the price is going to go up. No, because the demand that comes in when the price is going up gets internalized, and that settlement gets pushed out 6 weeks. So what happens? People are buying, but rather than seeing the price go up as a result of their buying, it starts to go down. So what happens? They stop buying. They're going, oh no, I'm not right. And that authentic demand shows up somewhere else. It shows up later. It shows up down the line. Then it emerges, and then people go, oh, okay, well, let me rush on top of this. I don't know what's happening. Well, let me get in. But then that gets internalized 6 weeks out. What happened? Oh, we dipped again. What's going on, right? So yeah, it is bullish. It's very good, but it's not allowed to be bullish until the powers that be have established the proper positioning in order to optimally take advantage of that bullishness. That's what I imagine. Yeah. We did get it. We went up to 2670. That's right, Patrick. I don't think that'll happen. I mean, there are definitely more people doing it now, you know, now than have in the past. But I don't see that becoming like the default. Yeah, essentially. It'll be like 30 cents per 100 shares that you have. It'll be like 30 cents. You're getting a free 30 cents per 100 shares, or 3 cents per 10 shares. Which may be worth more in the future if you exercise them, or if the price goes up a lot. But it's going to start out as being 3 cents for every 10 shares that you have, or 30 cents for every 100 shares. Right, and every 1,000 shares you have, it's equivalent to a call option, a $32 call option for October next year. So it's a free leap. It's a free out of the money leaps, or it's a free 1/10 of an out of the money leaps. That's what you get. My average days to expiry depends. So right now, I have open just mostly stuff for next Friday because we're going into a higher volatility period. So I shorten up my days to expiry, shorten them up. Previous cycle, I was doing stuff 1 month out. 1 month? I was layering them actually. So I was going like 2 weeks, 3 weeks, 4 weeks, 6 weeks, something like that, 8 weeks. Yeah, same question. Yeah, that's how I do it. So low volatility period, stagger. Higher volatility period, close the get tighter on the expiry. The GME shares or exercised warrants will be coming from the company. So if you exercise them, you're going to get issued a share from the company. You'll pay them money, right? So the money that you pay for that new share goes to the company. So GME shareholders and warrant holders will have the ability to essentially transfer up to $1.9 billion in cash to the company. So by buying these shares, right, it's non-dilutive because you will be able to participate in the offering, right? So the bond offerings were, dilutive or forwardly-lookingly dilutive, even though they acquired a lot of capital, because retail traders cannot own those. Same thing with the at-the-market offerings. Retail could not own those. So money for those could not come from retail, could not come from retail shareholders. But the warrants are being issued to retail shareholders. So retail can go ahead and buy those and not be diluted. Not be diluted. I mean, every time that happens, it's an accretive offering. So even though there's been dilution, the floor on the shares rises, and so you still end up with more value added as a result of the offerings than you lose as a result of dilution. So it ends up being accretive. Yeah, if I had $10 million, I'd have a lot more GME shares, so I could have more dollars. Not going to ban me at that point, if I have 10 mil. If exercising the warrants are like exercising an options call, would it be advantageous for us to exercise the warrants so no settlement can kick in? I don't think there's going to be settlement, though, because the shares are going to come from the company. So they'll come into existence. So it's not like there's got to, I don't know. It's not like there has to be some transfer between parties. Like OCC is not going to be involved. If I had $10 million. Yeah, okay. All right. Yes, Shinsatsu's got it. May's got it. It's no good. But what I do. That is a good point. Oh, no idea. No idea. Billions? I don't know. Hey, Sam. Yeah, I think we'll end up moving up like the ape dividend. I think we'll probably run up a little bit before it. I mean, that's just what's happened historically. And then maybe down after that, and then we'll see what happens with rate cuts at the end of October. Why does every week now somebody's like, am I cooked? I don't know, dude. What'd you 25C? What did you? It depends what you bought it for. For 26. You have a chance, I think, for it to go, for it to go a little higher, a little bit above 25, maybe midweek. I'm sort of leaning toward thinking the price will go down next week. I could be wrong. I'm speculating. This could also be what I want to see. Overall, signals are bullish. The only question is, are they going to pull it down because they got to do a swap thing or something like that? But for 926, I mean, that's hot potato, dude. Be careful. That's tough. That's tough. Call wall for 926 is up at $26. So it's not as risky as it would be, say, going into next week. You would have taken a big hit. I mean, you still might get some play in there, but that'd be very risky. That's too risky for me. Like I said, in the money. The only thing I think I would trade and hold for a longer period of time, if it were long options, would be like $20 calls. $20 calls, because no chance that the value ends up at zero. No chance. And still 4x leverage, 5x leverage. Not 19. Oh, I will be sleeping well. I'll be sleeping well. It's been a long 2 weeks. I have not, actually. Oh, excuse me. I have not looked at other companies in this regard. I mean, I remember RKT, but they didn't do warrants and the ape dividend, and those converted. I don't even remember what really happened with those. That was a weird trick. That was different. Yeah, that's a good point, actually. That is a good point. Maybe it's Moas. Maybe it's Moas now, guys. I don't know. Maybe they're ready just for the thing. Well, we'll see. We got to see what institutional filings look like in November. Let's see what they did in July, August, and September, right? That'd be fun. That'd be fun. I don't know, maybe. Dilution. Yeah. They love to say that. That'd be very cool. That'd be very cool. Yeah, if we go to 11.5, that'll be very cool. And then exercise. Cash plus Bitcoin is 9.4-ish, I think, right now. So yeah, 2 billion from the warrants. If we go to 32, then market cap will be pretty up there. Let's see. Are they 4x leverage right now? What are they priced at? Yeah, they're priced at like $6. So yeah, they're like exactly 4x leverage. That's good. That's some good leverage. Do you need 20? That's the thing. What are the... Yeah, 25s for the 26 are more than 20x leverage. They are like 30x leverage. Now you know why they have those types of payouts, why you lose a lot of money if you get it wrong. Yes. Is that at least we know for sure the new shares are not rebutted. Yeah, that's true. That is true. Exocade. I'm doing okay, man. A lot of dodging property tax fraud. Was very sad about the assassination of Charlie Kirk this week. Like I said, I put it in the video, I think, and put it on the article. I didn't follow the guy that closely, but I know what he was trying to do. Somebody who didn't want to see violence in the United States, and just wanted to talk to people, talk to young people, especially. It's I understand, like, as far as I can tell, that type of motivation that he had, is why I wanted to teach, why I wanted to talk about great works of literature and talk about history and stuff like that, is just to, see people suffer, you see people go through difficult times, and you're like, hey, I wish you didn't have to do that. I wish you didn't have to feel that way. And seemed like that was something that motivated him, and just very sad to see him murdered. Very sad. So that would have me a little bummed this week. Could be something like that. Yeah, I mean, the rising floor is kind of the key there to getting slow ass going. We're already doing slow ass, but it should pick up if we can get our floor up into that area, I think. Then they'll just give up, right? I mean, that's the thing. Once we kind of get up over 30, I think I don't know. Just they kind of just give up on this game, and they're like, all right, time to go long. We'll just all go long. It's inevitable at this point. I mean, I think it already is inevitable, but they're probably still waiting to get optimally, optimally set up here. We are ready, though. We are ready to go back. Yeah, I see why I put it at 32. That makes sense. And then if we go there, we can exercise and it'll go higher. And yeah, we'll see. We'll see. We'll see what next week brings. Hey, cheers, man. Yeah, it's 30 cents because you get it's 10 warrants per 100 shares. So a call would be 100 shares. If you got 100 warrants per 100 shares, it would work out to $3 per share. Right, because the price of one call about a year out is around $3 or $4. So you're getting 1/10 of that. So it's going to be 100 shares gets you 1/10 of a call. So rather than be 300, it'll be 30 cents. So it's about 30 to 40 cents per share. Right, $30 to $40 per 100 shares. 300 to 400 per 1,000 shares. 3,000 to 4,000 per 10,000 shares. 30,000 to 40,000 per 100,000 shares. I doubt it. I doubt it. Looking at that balance sheet, that makes no sense. Yeah, makes no sense. But I'm sure they could spin it. I'm sure they could spin it how they want. But I think that's where we'll wrap it up for this week. I'm going to go to sleep. It was wonderful to see you guys, as always. Right, very, very, turbulent week, but you know, some sad stuff in current affairs. But the company goes on, community goes on, and yeah, I'm very thankful for all of you. Very thankful to have the community that we all contribute to, and to have this bright spot in the world, to have to have GameStop as something that I think is making a difference, and making a difference in the lives of a lot of people for the better. So at least I hope that's the case. I think so. So yeah, so we'll see you guys. We'll see what next week brings. We'll see what September OPEX brings. But looking forward to seeing you guys on Monday, and of course, see you on socials and stuff over the weekend and stuff. So have a good weekend, everybody. We'll see you. We'll see you soon.